Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, three charts, and three trades. Rick Ducat will take us through the charts, and here to take us through the trades is Don Kaufman, co-founder of TheoTrade. It is great to see both of you. Don, all right, you've gone first up on your list. You've got Broadcom. There are some who argue that Broadcom should be a member of the Mag 7 and that we, in fact, should boot, I don't know, say Tesla or Apple from the Mag 7 and Broadcom in its place. But you have an interesting take. Tell us your views on Broadcom.
Wow. Boot Apple? That's just, it's all kinds of wrong. And again, boot Tesla? Where would the drama come from in the Mag 7? So yeah, Broadcom. Well, I'm going to start off on a really kind of sour foot here. Let's get bearish. Look, I can look at a chart as much as the next individual, and this is absolutely stepping in the way of a freight train to the upside. But I'm going to tell you something. I'm looking specifically at the options order flow in here, and it's really diminished in the last couple of trading sessions. And it's not necessarily because of a holiday, because last week, even the options order flow was better last week. It's really diminished. I'm actually going to take a bit of a shot here in AVGO. I'm going all the way out to the September 19th expiration. Doing that to buy myself just a little bit of time, looking for a pullback in here. I'm actually going to do a spread that is the buying the 250 puts, selling the 240 puts. It's a full $10 wide spread. Again, buying the 250s, selling the 240s. This one's done for a $2.85 debit. Look, it might not break today. It might not break tomorrow, but that options order flow is definitely displaying that these squeezes to the upside may finally be coming to a degree of the end.
Okay, Rick, Don, look, Don has come before and said he is not afraid to step in the way of a freight train. So tell us about the trends that you notice about this chart for Broadcom.
Well, I mean, to use that analogy, I mean, even the freight train has to slow down sometimes. And that's really what I'm seeing when I look at this chart. What I mean by that is that this one had a significant breakout point here, 250. That was a repeated ceiling for price. From there, we drifted downward for a while. We held on to those old 52-week lows. But from there, after we reclaimed that 250 level and pushed above it, we had some consolidation. Now we're pushing to the upside. But the general price pattern here is a rising wedge. Two trend lines, both pointing upward, but converging toward each other, typically regarded as a more bearish pattern here. Notice as well that even though we've made intraday highs so far, we did not make new closing highs, and we're on pace for a bearish Harami type candle here. You can see our smaller green candle, for now, completely contained within the previous day's larger red candle. So there's still plenty of time left in the day. May not shape out that way as we head into the close. But for now, not really seeing the kind of momentum you would want if you were bullish. And speaking of momentum, when you look at RSI, you see it is not matching up with the price activity. We are seeing bearish divergence here, a symmetrical triangle type shape that suggests the momentum is waning in this one. So if we were to assess our volume profile and standard deviation channel studies, well, for right now, we're quite close to that +1 channel, suggesting the move has already been quite extreme. This is sometimes used as a measure of resistance for traders. Volume really picks up again down here near about 240. That's our linear regression line, our fair value line, quite close to our 63-day EMA as well. So as Don said, 250 to 240, right about this area here, matches up with some technical levels.
Okay, all right, Don. Any final thoughts you want to leave us with on your trade here as it comes to Broadcom?
Yeah, you know, Broadcom is representative, obviously, of big tech. And right now, big tech is the marketplace. I mean, we're seeing divergences all over the place. Look around. We're going to talk about a few stocks here in just a moment. But when I say there's divergences, the performance of this marketplace is solely coming from tech. Sure, financials actually played a role, but even those have actually started to break down earlier this week. So pay very careful attention to underlyings specifically like Broadcom.
Okay, all right. Let's move on from tech and talk about the next trade on your list. You've got Target in focus. You've got your target on target. I'm not surprised by the approach that you're taking or you're going to take here, but let's fill in our audience on what your plan is here for Target.
Yeah, Target. Well, Rick's going to look at the price action in this in a moment, and it is not pretty. I mean, here's an underlying where failure is an option. I'm going to hop right on board. You know, it's not often that I want to jump on trend, but Target had a little bit of a bid. It had a bit of a rally, and now it's starting to fade again. I'm actually going to jump on and fade it with that. As I said, you know, failure is an option. I believe it's actually going to retest some of the lows in and around the 90 level. As such, the trade, again, I'm going to give myself some duration here. Target's a little bit of a slower moving animal at times in terms of its volatility. But I'm going to go out to the September 19th again. I'm going to buy a 95 put, and I'm going to sell a 90 put. So it's a $5 wide put spread. This one's done for a $1.50 debit. Just a very straightforward, slightly out of the money put spread, looking for, if you will, a little bit of price action to the downside, retesting, as I said, those lows, 90 or below.
All right, it's been a difficult year for Target. So Rick, tell us about what you're noticing about the technical trends here.
Yeah, a difficult chart to be sure. And when we look at it, we can see that it comes in a couple of phases here. We had this more sideways phase where things were, for the most part, going okay. Then we had this earnings event here, a very severe drop to the downside, very heavy volume. Never really recovered from that. We topped out here far short of filling the gap, just a brief test of our purple 252-day EMA, then a long slide here, bottoming out near the tariff news announcements. 87.35 was the intraday low point. From there, we've rallied. We are up about 16, 17% from that point. But, I mean, mostly sideways, moving averages, drifting closer together, clustering, not really any strong directionality here. You can see this was another notable gap level near about 104. We failed here, and even though we did fill the gap and make a close above, price quickly retreated. We're back below that 104 level once again here. RSI still holding on for now, but look for that green trend line to be breached in tandem with that 50 midline here. That would signify more of a shift to the bearish side of momentum here. So if we were to look at our volume profile study, the point of control is down here, 95.77. That typically suggests that a significant bottom has been reached in terms of the prices here, but that certainly doesn't mean it's going to hold. That just means there was a lot of trading activity here. You could get an even more severe breakout when one of these important levels is breached. Notice as well this range-bound period that we mentioned earlier, 104, another heavy volume node that the price failed to break through. A quick glance to a 10-year weekly chart of Target. Quite low, holding on for dear life here above 90. That represents a key level back here.
All right, and Don, let's talk about the final trade on your list. You've got the iShares Silver ETF on your list. It's been a big outperformer this year. This one, it doesn't seem like you're about to run through a freight train. Tell us your approach here.
Yeah, you know, it's just about a month ago, I actually caught silver to the upside. Silver jumped above 30, you know, into this 33 range. So right now, what are we seeing inside of silver? Consolidation in and or around the 33 range. I'm waiting for it to effectively break out once again to the upside. And I think it's actually worth the shot, okay, on this one. You know, even in the last few trading sessions, we've seen some degree of strength in the dollar, but it's not really having any negative implications, if you will, to silver or gold for that matter. As such, I think it's you know, a clear shot to be able to take this this trade as bullish, looking for silver to finally stage, if you will, that breakout above 33. The trade for this one, I'm just going to go out to the August 15th expiration. I'm actually going to buy the 33 call, so pretty much the at-the-money call, and sell the 36 call. I like to use spreads. There's quite a bit of volatility, even in the silver ETF here. So SLV, $3 wide spread done for a 90-cent debit. Looking for silver, again, to appreciate a little breakout above that 33 level.
All right, Rick, take us through the technicals on this chart for the silver ETF.
Yeah, so the first level I would point out is a little bit shy of 33, 31.80 right here, represented an old high point that is around the level of where the breakout point was. We didn't really test that old high exactly. Prices held firm, just a brief test of that yellow 21-day EMA, and now knocking on the door once again of those highs, the intraday high 33.87. You can see that we did have a little bit of bearish divergence and momentum as price made new closes. Momentum has significantly started to drift here, but price is still holding firm. Price is still hanging on quite close to that high area here. So sometimes momentum slowdowns are just the consolidative phase before the next leg to the upside here. If we do breach above these old highs, they line up fairly closely with our +1 standard deviation channel. So some potential additional emphasis on that level. Heavy volume here near 33 as well. The next volume node comes in near 3160. So that could be another downside area to monitor here. A quick look at our longer term chart as well shows that we are near the +2 weekly standard deviation around that same point.
Okay, Don, floor is yours. Any final thoughts you want to leave us with on your trade approach here for the iShares Silver ETF?
Just in general in the marketplace, look, this marketplace has been all tech all the time right now. That is what is effectively dragging the S&Ps kicking and screaming higher. Look for some divergence in this trade. Again, things feel like they're literally at a fever pitch right now inside of the S&Ps. We're going to be watching tech very carefully, specifically the Magnificent Seven in the days to come for any signs of a reversal, as we're seeing possibly the beginnings of that even in today's trading session.
All right, thank you, Don. That's Don Kaufman of Field Trade and our very own Rick Ducat. Thank you both.